Good morning and welcome to the Leadership in Insurance podcast, affectionately known as the LiiP. I'm very lucky today to be joined by Marcus Schmalbach. He is the CEO and founder of Ryskex, which is a really interesting parametric insurtech solution. Marcus was very kind to talk to me a couple of weeks ago, and he's got a really interesting story and some really good energy as well. So hopefully we'll get into some pretty good conversations. And actually, I think we engaged first off by being quite rude about a few things that we agreed on that the market doesn't necessarily agree on us. So hopefully we'll get into that. But welcome, Marcus.
Hello.
Hello, how are you doing?
Great to be here. Thank you very much for your invitation.
No, thank you. Well, I wanted to dive straight into it because one thing that's kind of becoming increasingly common with the insurtech founders I speak to is that they have sort of unusual career paths for an insurance executive. So, but you joined the insurance market proper, didn't you? Was that straight from university or education or?
Yes, exactly. Directly from university, I started my career within an industrial insurance broker, and then first insurer, reinsurer, university, back to university, and then the startup. So, in a nutshell, so I think I can say I've seen the whole value chain.
Yeah. So why insurance in the first place? Because I did the same. I went into insurance straight from university. But
I know nobody, even in my team, trust me when I tell that story. But I was born and raised in Baden-Baden, in a beautiful town of southern Germany. And maybe for the guys who listen to this podcast who do not know, there are two big reinsurance congresses every single year. Not this year, but normally. The one is in Monte Carlo, the other one is in Baden-Baden. And when I was a young boy going to school, I always realized one week was completely different from all the other weeks in Baden-Baden because the reinsurers came into town. Persons well-dressed, and with the big money in their wallets, and so I asked some of them, "What are you doing, guys? What is a reinsurer doing?" And he described it to me, and I thought to myself, "Okay, this is something you should do in your further career." And so I really, I know it sounds a bit like a fairy tale, but this was the beginning of my career, more or less, because I went to university and focused on finance and risk. I always loved these topics. And so, afterwards, I didn't go directly to the Munich or the Swiss Re or someone else. I started with an industrial broker close to my hometown.
Yeah. And then you went to Allianz, did you, on the underwriting side?
Exactly. I've been to Allianz making a trainee with a focus on sales. As I realized it was really interesting working for the broker I was with, but they have been I wanted to change after 3 years. I needed a change. I wanted to see the opposite side of the table, and became the opportunity becoming a trainee in sales. I always focused on relationship sales topics. And so, Allianz is one of the biggest names in the world, and especially in Germany, a wonderful company. So, it was great joining a blue chip company here.
It's quite. I think one thing that I've noticed about your career is that there's a lot of element on clients, client relationships, sales, business development, which for someone that's like so heavily technical as well, that's quite an interesting dichotomy of skill set. Do you think that's important to someone who's going to look to sort of launch a startup?
I think it definitely helps, because the thing I love to work in sales is really you're sitting in front of the client, which means on the one hand you receive the positive feedback as the first one. On the other hand, you get the negative aspects as well directly from the client as the first one in the company. So I think you really have to understand the clients first. Frankly, I would not say the customer centricity approach is coming more and more in the insurance industry, and we drop that. Sorry, I call it a buzzword, but we drop it more and more, and the design thinking starts more and more, especially driven by the startups. But without being rude, hopefully, in the 15 years ago when I started, there was nobody knew what customer centricity means. Our job was selling our products, and sometimes it fit perfectly with the client, sometimes it doesn't. So it was really interesting to get an understanding, what does the client really want? And so the sales, if you do it correctly, is more or less the first innovation, the innovation driver within a company, because he has to listen to the customer and understand the customer's needs, and then give it back to the back office, to the tech guys, to the underwriting guys, to the smart guys who conceptuate the products. So it was really interesting seeing both sides and being on the road, being with the clients, but also having discussions with the as I said, the smart guys in-house who create the products, who sometimes do not really understand the customer, and the customer do not understand what they want of them. And so it's always funny, because you're always a troubleshooter, but on the other hand, it's so much fun position of a sales guy.
I think it's that loop, isn't it? I think, as you alluded to just then, because I said, if you're not careful, you can launch a product that, and we've seen this a bit in the insurtech market, I would say, is that you can launch a product that academically makes sense, that, it's logical, it's got good maths behind it, it's got good technology, but sometimes you're solving a problem that isn't there. And the other thing is, there's the famous Henry Ford quote, isn't it, about if I asked the customers what they wanted, they'd have a faster horse. And so there's that there's that feedback loop of essentially just listening to the customer. They won't necessarily know what the answer is, but you're the expert. If you've got a good feedback loop, you're taking what are problems from the market, and then you're feeding them into the business and creating solutions. And I think that's where I'm seeing these kind of really interesting founders like yourself. We spoke to Amit Patel last week, who is was a surgeon, has launched and worked for Bupa private healthcare, and is now launching a private healthcare focused insurtech. So there's that grounding of like where the problems lie. So the fact that you've got this kind of like history in insurance and speaking to, that's why I think that's useful, that feedback loop of being a customer facing person. You get to see where the problems are. But I don't believe they're always right. I'm not having this customer's always right business. Certainly not in my industry. The
Henry Ford example is one of the greatest approaches you can drop here as an example. Sometimes the clients themselves do not really know. There's a great example on the market existing with Metabiota working with Marsh and Munich Re, which is a really powerful symbiosis at the end. And they delivered a parametric, a pandemic solution a year or 1.5 ago. And I heard that they sold one or zero of that product, because the clients imagine that there will not be a global pandemic happening. Now we are in the time where every single client asks for a pandemic cover, and on the other hand, the insurers say, sorry guys, we are not able to cover that anymore. So as you mentioned, sometimes it's not really a sales function, especially with a non-haptic product. I would say in insurance, it's more a customer relationship management and the consulting function you have, especially in the industrial insurance market. It's not just saying, okay, here's liability, and the client says, yeah, I buy the liability. Of course, it's more really a consulting function. And so it was a great time. And as you mentioned, it definitely helps when you build a startup to remember what are the customer's needs and what are they looking for, because not everything what from the insurance perspective makes sense does make sense from a client's perspective. But I think this is not already said, not an industry specific thing. This is with every single other industry more or less the same.
Yeah, I mean, Amazon is obviously a massively overused example, but Amazon's doing something that's been done. It's a retail business. Well, it's obviously a lot more than retail business with its tech stacks and stuff as well. But if you take the retail element of it, they've just solved problems that consumers have. Like, I hate the fact I use it so much, but every time I think about using something else, I'm like, well, it will be here tomorrow though, and I don't have to leave my house. So,
yeah, everybody, I think, loves the underdog more, and thinks of, maybe should I go to the city and buy there, or really spend so much money on Amazon? They are rich enough. Jeff has enough money. Why should I buy there? But at the end of the day, as you say, the benefit is I can stay on the couch, and whatever I'm asking for, it will be there tomorrow. If I need an elephant of India, I will have it 2 days after I push the button on my Amazon. So I do not have any clue where I should get an elephant from elsewhere. So on the one hand, if you pitch Amazon, maybe it sounds like, okay, not really impressive, but you see that the easy things are the most impressive, with the greatest impact, because you give every single person the opportunity to understand it. So the greatest solutions are the ones who are easy to understand. Which maybe is a bit different in the insurance industry.
Well, I thought that. I mean, I want to sort of ask you about your academic background, but one of the things that I noticed about parametrics was, like, in a way, the simplicity of the solution is the appeal. Because I was thinking about this from a personal standpoint. So I've got obviously household insurance and contents insurance, and I live in London, and I lived in London for 7 years, and I remember when I moved there, I was like a little country bumpkin, and I thought I was going to get robbed every week and burgled, and obviously it never happened. And then 3 days before I left London to go to the coast, I got burgled, and someone broke into my house and stole a load of laptops and other bits and pieces, and I was paid out on it, and obviously I was paid out, which was fine, but it was just a really long process. And actually, for me, it was just like, if I just had some sort of like payment, some payment, just some mechanism when, I've got a claim, here's some money, thanks very much, and to go off and do it on myself, the simplicity of it would have been worth the not getting the full value, for example. And obviously that's not what parametrics are. It's much more complex than that, but the simplicity of a solution like that is the appeal. But we'll dive into that in a second. But I wanted to find out why. So what you're going along insurance, you're doing the role that you're doing, the sexy, glamorous insurance market that you've seen in Baden-Baden, and but then you give it all up to go into academia. What prompted that?
I decided to make my PhD with the University of Gloucestershire in Great Britain. Mm-hmm. And then I asked a friend of mine from the Munich Re America office in New York. I wrote about captive insurances and the prerequisites, which is at the moment an interesting topic as well. Mm-hmm. Maybe a bit too late for my thesis, but okay. And I wanted to find out why the German Mittelstand, which makes a turnover of $1 billion, does not use alternative risk transfer products. And this is a much better developed market in the US. And so Ed Liebrook, who is head of Munich Re desk in New York City, became my advisor. Someone of the university in Gloucestershire told me that they are flying professors for a university in Bielefeld as well. And they said, Marcus, they are looking for someone who can start making lecturings on sales and marketing in 2 weeks. And they are looking for someone, but they do not find someone. And I thought maybe it's something you are interested in. And I thought to myself, I worked in Frankfurt, and I thought, okay, Frankfurt to Bielefeld, okay, this is a 2.5 hours ride for lecturing, but I love to make new experiences. And so I had a call with he said, maybe you should come here. And we set up an interview and see if it works. And I said, I cannot come for an interview. You have to say me it's okay or not. And he said, okay, you start Monday 10. And first lecturing, I came 1 hour. I was 1 hour delay.
Nice.
Yeah, everything went on that morning. But then I really loved working with the students, and the students loved someone from the industry who maybe had a different spotlight on some things and described things a bit differently than a traditional professor. And so they evaluated me great. And the dean asked me, we never met, by the way, the whole semester, we never met. And he said, he really never. And he said, Marcus, seems you have done a good job. Will you do next year 2 other courses? And I thought to myself, okay. And then, cutting a long story short, it took 1 year, and they said to me, are you interested in becoming a professor and working with the students? And I said, yeah, why not? Till I finish my doctorate thesis, more or less. It's a great opportunity linking those chapters together. And then I set up an MBA program, cooperation with my friends in New York from the Metropolitan College, and I had a great time. And then it was a student coming in and said, Marcus, I want to write my master thesis on blockchain because it will destroy your whole industry. I was always working as a consulting within our industry and did research. And he said, the blockchain will destroy everything. And then to link it now to the next chapter you will talk with me about, he said, the solution works like that and that. And I said, okay, Marco, take a seat. We scribble a bit and we noted something down, and I said, okay, the blockchain itself does, just from my perspective, make sense if we are going into the parametric area and away from let's say the traditional indemnity approach. And then he wrote his doctoral thesis with me, and afterwards I realized, okay, you can stay now forever in university, or you really go out of here and found something, get the startup experience. As I said, I love new experiences. And I said to my university, I'm doing a sabbatical for 2 years. Now I make a sabbatical in the 3rd year, and I'm not anymore with the university in Bielefeld. I'm now just a visiting professor for digital transformation, which means AI, blockchain, IoT at the great ESCP in Berlin. For 4 hours a week. That's fine with me, having my students around me, and the rest of the day, yes, I'm the founder, as you mentioned, the founder and CEO of Ryskex, and try to bring the parametric solution into the market and sensitize the people for that great approach. And in the next step, I try to show the world why the blockchain and all these nice technology things like artificial intelligence are so useful and helpful for the insurance industry, and especially when you use parametric, it's perfectly possible to link it to the blockchain. Just to give, I always do that because I love them guys. Fizzy, which was a startup bought by AXA, they are not existing anymore. I'm so sorry for the guys, but I always drop them when I ever on a panel or something like that. Guys out there, if you listen to that podcast and you would love to understand why parametric suits perfectly to a blockchain and how this model could look like, have a look on the Fizzy case. Them guys did such a great job. But as we discussed earlier in the podcast, maybe they did a flight delay, and it was really a bit of complex things with some cryptocurrency. And so it was not, let's say, for everybody, made for everybody. And so the idea maybe failed. But from a technical perspective and from, let's say, from an engineering perspective, this is the best use case I've ever seen in my life, even better than Ryskex.
Right. Well, let's explain, because obviously I've spent some time talking to you and looked up Ryskex. For those people that don't know what Ryskex is, could you give us a sort of a brief explanation of what it is and how it works?
Yes. Ryskex is the short form for risk exchange, and the Y normally is an E, but it looks better because it's a Y who looks like the blockchain, but more or less, Ryskex is similar to a stock exchange. At a stock exchange, you can trade stocks for sure, and at a risk exchange, you can trade risks. The idea behind that is really saying a company has the opportunity of tokenizing their risks, and it's definitely we just offer a parametric solution. So we tokenize the risks, make a parametric solution out of that, and push it through the platform into the market. And this is maybe the innovative aspect, that as this approach have many great startups I've seen out there, making parametric solutions for companies and pushing it through the platform as an MGA or a broker, whatever, to insurer, or most times to insurers, or Equinova pushes it from insurers to the reinsurers. The Ryskex approach works a bit differently. We are focusing on the really hard to place, hard to cover risks, and not just trading because of maybe sometimes capacity problems, not just to the insurers and the reinsurers. We also say hedge funds, ILS funds, investment banks welcome, because the great thing with the parametric is really that it's so easy to understand and it's so easy to handle. It's just a if this happened, then the payout has been done. And so it's easy to link it to hedge funds and investment funds, because what we from the insurance perspective would say is a claim. For them, they would say it's something like a margin call. If you have bought a put option or something, you go short on the market, you get the margin call, and we sell it to them not from an insurance perspective. We say you have the opportunity of getting a high interest rate, but if this happens, then there's the margin call coming and you have to make a payout. And at the moment we have low interest rates, as everybody knows, in the banking sectors. So we have the luck that there are enough bankers out there who are really looking for new investment areas. And Ryskex is focusing on risk bonds, risk as an asset class, and we are focusing on blue chip companies, well-known big companies which have their own risk management or captive center, means they know about the insurance themselves. So they are not smaller companies who maybe are the controller is doing the insurance by side. We are really looking for the big companies where risk is a strategic element of the planning and directly linked to the CFO. And so we trade their big risk portfolio via our risk exchange to a number of what we call risk taker, which means people who are interested in receiving a rate, a great interesting rate. This is what Ryskex is doing.
Brilliant. I mean, that's one thing I was going to ask you, because I saw, I suppose the parametric solution and Ryskex, it's only really sophisticated buyers that can take it, because I suppose that's where the insurance industry traditionally adds value to companies, is the advisory of making sure there's enough coverage, making sure there's the right cover. So you couldn't, it pushes that to the consumer, doesn't it? The buyer of insurance, it pushes that responsibility to them. So presumably, it's only right for people that have that risk and insurance function.
Frankly, sometimes the people ask me, especially let's say the brokers are sometimes a bit afraid of when I'm dropping the idea, and they say, where do we come in? Where do we sell our consulting solution and our broker business, finding insurers who cover that lines. Thanks for the opportunity. Now saying we are happy working with the brokers, as we realize that the clients are always happy if they still have a consultant at the table. But we had several discussions in that environment in the last 2 years in several panels and tables and whatever. And what I realize is that the traditional broker who's just have the slip under his arm and saying, going from box to box and saying, may you please take 5% and then 10% or whatever, is a bit switching really the position into, as you mentioned, making a consulting job. And even parametric is easy to handle. The consulting job means what are the triggers for the parametric to find out what are the veritas, which means which third independent party we use to say, okay, this really happened. For as an example, for a pandemic, it's not the company or the investment fund who say, okay, we have a pandemic now. In our solution, it's the WHO, which gives an official statement, we now have a pandemic. And then for our US covered business, it's the state governor or Mr. Trump who say, okay, we are now having, how is it called? State of emergency.
Yeah.
So we say, if the WHO say it's a pandemic, and let's say with a focus on a specific area, let's say New York, the governor of New York has to say, okay, we have state of emergency, and then the payout is being done. So at the end of the day, there's no influence by the insurer, but also no influence by the policy holder. And so the consulting job is really to say, what is a fair trigger, what is a fair veritas, and what at the end of the day is a fair price for that kind of solution. As this is, the parametric is not really new. The reinsurers selling to the capital market, catastrophe bonds, etc., has a long-standing tradition. But bringing this solution, let's say, closer to the policyholder, the traditional insurance buyer, is a bit a new development, and I would say a hype thing at the moment, because yeah, as we already discussed, it's so easy for the policyholder to understand when a claim is a claim, and the payout can be done very, very easy and very, very fast. And especially in times of pandemics, when you have a pandemic cover, it does not help you when you receive the money in 3 years. You need the money now. And that's a fantastic opportunity with the parametric.
Yeah, I mean, the pandemic's been quite good for your business, one would imagine. Bankers are looking for places to put money, and the pandemic, I think what it's really done is shone the light on where some of the traditional insurance, where it falls down. You know, as you rightly say, even if you on cover for business interruption, if it's being disputed, if you're going to get the money in 6 months' time, means nothing if you're going to go under because you've got no cash. You know, so it's really, it's been interesting how much kind of activity there's been in this area, or certainly coverage. I think, if I'm being really, really honest, sort of parametrics is something that's been on the periphery of my conversations, but in the last 6 months, it's been a sort of daily thing in all sort of news cycles that I've seen in the news press. One thing that I wanted to ask you about risk takers, and I suspect, firstly, actually, no, I wanted to ask you about, so the sort of key things to look at the risks that are not covered. And I saw on the promotional stuff, and there's sort of 55 typical large risks that companies take, and only 14 of them are covered by the kind of traditional market. I'm not going to test you and ask you to name them all, but what are the kind of most common areas where people struggle to get cover that you're sort of finding this is a solution for with Ryskex?
At the moment, it's definitely really pandemic. And I would say every single risk, we can talk about that, I think, for hours. The clear definition of insurance. Yeah. So as I come from, as I'm an academic, and so sometimes you have your, I will not say you have your own definition, but you see it from a real, an insurance, from my perspective, is a law of large number means many people pay in, and you have one of 1,000 claims. This is from my perspective. This is my understanding of insurance, because we had that discussion really, as there are some experts, definitely experts out there who say it's still an insurance if you pay 10% a year or 15% a year. And from my perspective, then it's not an insurance anymore, because then obviously the law of large number does not really work, because a premium of 15%, my dear, there are 1,000 different opportunities than giving the insurer 15% of the risk. Then definitely use a captive. So but to answer your question, I would say definitely systemic risks, and pandemic, for example, is a systemic risk. For me, a global cyber attack is something like that. We had the discussion in Lloyds Lab Fusion. Our example was a power outage, which means there's no power anymore, and it was done by the University of Cambridge, so you can trust them, people who said it's a 1 in 200 risk that New York and Washington have no power at the same time. But what will happening then? You will have riot attacks. Nobody can work anymore, because if there's no power, you cannot work with the internet, and so on and so on. And these are really the high-end risks. I would say nobody supposed, or even you cannot really imagine of them. These are the real things we are focusing on, because you always have to keep in mind that the traditional insurance lines, let's say the property or something like that, there's a homogeneous market existing, and then the law of large numbers working. But especially everything which is linked with new business environments, political topics, terrorism, things like, let's say, not the traditional property and liability, whatever, where you can see a homogeneous risk, and we have thousands of years of data existing and so on. This is more or less our market, really the tailor-made stuff, where a big company comes and say, okay, we are XY, a big company with a specific focus. We had the example, we have I just say as an example, Apple. These are not our clients, but just for the understanding. If Apple has a cyber attack, and you use the traditional birding, they would receive money because they have been down for 12 hours or something like that, and the forensic and so on. But sorry, this is the richest company in the world. Their major problem is not that they need a programmer for closing the gap or something like that. They have smart guys there. The biggest problem would be that Apple and the clients, maybe data got stolen, credit card information got stolen, and then you will definitely have a hit at the NYSE, because the stock will slump, because the market will say, okay, they hacked one of the most powerful and biggest companies in the world, and then they have a reputation risk. From my perspective, and this is a risk which is really hard to cover, reputation cover. So we say, okay, cyber as one aspect, but in the case of the Apples or the Marriott hotel who got hacked or something like that, the reputation impact the cyber attack itself. And so we are focusing really on tailor-made specific solutions. And here comes the capital market in, because it's hard to tailor-made something. For example, let's stay with Apple and say to an insurer, okay, here we made that, we contemplated that. Can you now pay Apple in case of claim 1 billion or whatever? And then the insurer will say, okay, that's a funny thing, but the law of large numbers, there are not 100 other companies which I can sell this solution to. And so it's easier to selling it to the capital market, because you tell them, if this happens, you know that the share price slumps. And so they have different techniques and opportunity within their own portfolio, saying, okay, if we cover 100 million, if this happened, we know that the share price slumps, so we make whatever a put call, whatever option on that, and link these things together. And so they have different, many different and other opportunities like a traditional insurance market to hedge those risks in the next step. A typical insurer maybe have the opportunity selling it to the reinsurer, but the capital market has a wider opportunity, and so they are the ones who are interested in that kind of solutions.
I mean, it's so interesting to hear you sort of use that analogy, because I think I saw Hank Greenberg talk. I think I mentioned this to you, but it's got to have been 7 years ago or so. And the thing he mentioned, I think it was the Monte Carlo review in London before the real thing. He was talking about cyber then, because he was basically saying where insurance was failing was because if you're a large enough company, and I think he used Google as his example, what can we offer them as a solution for things like cyber cover, and simply we can't. So and I liked his viewpoint was actually, if we can't offer cover for something, then we've failed, or the model is failing. So we need to come up with better solutions, because it doesn't mean that your solution doesn't exclude insurance companies, at all.
No. Thanks for dropping that. So I'm not interested in. I've spent 15 years in that environment. This is more like that we would love to assist and bring in, let's say, capacity at the end of the day. In the former years, it was really how did the insurance market earn money? Normally, the combined ratio was always up to 98, 99, 100, sometimes 101, 102%. But they had the opportunity of bringing the money, the premiums, to the capital market and received whatever, an interest rate of 4, 5, 6%. And if you are a huge company with a 100 billion turnover a year, of course, at the end of the day, you made earnings at the end of the year, and your shareholder were happy, everybody were happy. But now I would say it's switching a bit, because Mr. Powell in the US say still zero interest rate, more or less. So the insurance market has not the opportunity bringing the money to the investment market, gaining money with the capital market itself, and the combined ratio driven by, let's say, a pandemic. I read an article in the morning from Swiss Re, Corso, and Andreas Berger said they are up to 122% combined ratio this year. I think he really did a great job, but 22% is a tremendous thing. So what we say is the other way around. The people trust in the insurance market and the participants of them, but take the capital market, take them into the risk financing market, because they have the money. They do not know where to bring the money to, and the insurance market, on the other hand, has a too high combined ratio. So let's say there's the Swiss Re going on our platform and say, yes, we love that risk, we take 10%. It's easy peasy, because the hedge funds will trust the Swiss Re and say, if they take the 10%, come on, we take the other 90%. More capacity for the insurance market, more opportunities, offering their clients solutions for a fair price, and maybe modeling new insurance lines, and the capital market just saying, okay, we are interested in the investment rates, but that's it at the end of the day. So maybe the market just switched a bit, but it's not that we say the insurers and the skills the insurers and the reinsurers or the brokers have are obsolete, but the problems are higher. And Michel Diekmann, the former CEO of Allianz, said systemic risk like a pandemic is uninsurable, and he's absolutely right. What he means is, an insurer from the insurance perspective, it's uninsurable because every single company got hit at the same time. And this is not the insurance approach. If you want a solution on that, maybe you have to pay up to 20%, 25% every single year, and your clients will not accept. Because in Germany, we always say nothing beats a cheap insurance. And why is it insurance that cheap, because they know we have 1,000 clients and one has the fire within his company this year or something like that. But the pandemic hits every single client at the same time. And so sometimes I do not understand the policyholders who said, yeah, we need the pandemic, we have a pandemic, we need the money. We paid whatever 500 euros a year, and now we need the 500,000 euros from the Allianz or the, whoever. Sorry, this does not work from an academic standpoint or from a mathematic model. Everybody should understand that this does not work. So the insurers, on the other hand, or on the one hand, cannot just say it's uninsurable, and the policyholders cannot ask, let's say, someone for covering the risk for the insurance premium. So a new market will be created, and the policyholder will have to accept that the premiums are much higher for pandemic and systemic risk than for a traditional property risk. And on the other hand, the insurance companies will have to understand that they can not drive the solution their own, and have to ask the capital market to support them. That's everything. And what we do is hopefully being a tiny little part of that whole market, linking those counterparts together and delivering the technical platform to bring all these things together. Yeah.
But I think that's it. I think one thing that I'm sort of very conscious of is and it's not fair to say the insurance market lacks innovation, but certainly kind of as an industry, it's tended to be a bit slower to the adopting solutions, and this is one solution for their kind of pool of capital that they can choose to deploy, in the same way that you can choose to write in Lloyds and then outside of Lloyds, and then you can choose to kind of operate within alternative risk transfer. These are ways of deploying capital, and you're just giving, the way I read it, you're just giving another solution to something that, as you said, has been deemed uninsurable. And what we mean is it's uninsurable on the current way that we incumbently do insurance. So, which is always the way. I mean, I'd be interested to get your view, and I'm conscious of your time, so I'll start to wind things up for you. But I know that I was looking on the Ryskex company LinkedIn page, and there was a comment about the underwriting room being shut, obviously because of the pandemic, and it said about, underwriting rooms realistically, are they just a sort of harking back to tradition? And I think there's a large part of that. Underwriting rooms might go. Does that mean underwriters will go? I know. What's your view on that? Because long term is, at the end of the day, the banking market is the one to look to, and there was lots of people. There was physical input. There was mental input from experts in their market, and they sold on that way. But over time, every time you lost a senior experienced trader, you replaced them with, 5 developers and machine learning experts, for example. Are we going to see the same thing, do you think?
Okay, fair.
Do you want to answer?
I think I have to leave to go now.
No, I mean, look, maybe that's unfair.
First of all, I have to confess, frankly, we are now in the Lloyds lab for the 3rd time, and there's nothing I love more than the Lloyds underwriting room. It's really the traditional, the London city, really by heart. I love that, and having a beer afterwards at London Hall with some colleagues and so on. I love the atmosphere. But as you already mentioned, what happened in the banking sector, maybe not everybody of your listeners will know that, but there's a really good series come from the US called Billions, and I love that example. They had the trouble in I do not know the episode exactly, but they run into trouble and they had a cyber attack, and their young brokers didn't know how to work on phone because they did not know their prime brokers anymore and so on. And the old guns, X and Wax, then started calling their former brokers on phone. And it was really like talking, maybe children look at that podcast. I will not repeat what they say, but it was really like hard Wall Street talking on the phone. And the young brokers who normally just push on their laptop really looked like, whoa, what's that? And then was Wax saying them, hey guys, call your prime brokers in the Wall Street and sell that bullshit because they have to sell something. It would take too long. And they said, we do not even know them. We know it's Mr. Whatever sitting somewhere, but I normally just send them an email. And so why I'm telling this as an example, the banking and the Wall Street is always a bit in front of the Water Street. Who has ever been to New York, Water Street, AIG, Wall Street, the banks. So frankly, I think that the box-to-box business more or less coming to an end. This does not mean, as we realize now, most of the people at the beginning, Zoom and working from home and not dressing up in a suit and going to London City and so on. But there comes a time when you realize that Zoom makes fun and you can have a beer your own at home. So, and yeah, exactly. Maybe it's getting a bit more and more efficient. And especially in the global world, I think, from my perspective, I think there are some people in the US who ask themselves, why do I have to send my broker to meet a broker who has Lloyds access, who then goes from box to box? Why do I have not the opportunity setting up a Zoom call and speaking directly with TMK, with Beasley, whatever, on Zoom, or having the opportunity like you have with Bloomberg, pushing a bottom and saying, I want to sell 10% to you guys? It would be still a close relationship, but maybe it would change a bit. And so some people in the London market will hate me now, or some more. But I would say this is the digitization. Welcome to 21st century. I love especially Lloyds and the way of the London market is working. But frankly, I really think that this will be the last generation. I'm so happy that I really got that experience doing that and having a Lloyds badge. But I do not know if the people who start now going to university, they have a completely different skill set and they work completely different. And for them, it's not fun driving with the sub into the city, meeting friends, whatever. They want to stay at home, having their laptop on the table and just typing in and making sports afterwards, going to golf, going to soccer, read a book, whatever. It's a completely different generation coming up. And they will ask our generation to say, okay, guys, we need it digitized, or otherwise we will not work in that industry, because this is 19th century. How you work here, this does not give me anything.
Yeah, no, I think you're right. I think there's definitely something about that. A lot of that's cultural, and that's adoption across every industry. Because I'm not sitting here from a position of strength either. You know, I work in the recruitment industry. There's more tools to allow companies to do more themselves. Ironically, if we start all working remotely, that plays into to help, because the amount of people that got jobs down the pub or over drinks, that's kind of gone. But realistically, rather than be frightened of it, you know, my role is to run towards the technology and go, what technology can I use that allows me to be better at my job? How can I add more value? Can I do more testing? Can I do kind of more screening on behalf of my clients? And I think insurance is adopting the same. It's not that, you know, that knowledge base and that skill set of these highly experienced underwriters and brokers is not going to be disbanded, but it needs to potentially utilize the new opportunities that are there. But I just think culturally, because it's such a nice place to work, you know, the Lloyds, particularly the London market, is a little bit of magic, you know.
And I think I cannot imagine. Lloyds is now 334, 5 years old, and I think we cannot imagine maybe the big Ben is a bit more famous, but I cannot imagine London without the Lloyds building. Yeah,
No.
Every single insurance article you read, you always see the Lloyds building behind. Yeah, that's the empire of our industry.
Yeah.
What I mean is really the times are definitely changing, and you mentioned, let's see the broker's job. And I do not talk about the consulting brokers. I really mean the traditional broker. His job was really taking the slip and going from box to box and getting the 100%. So frankly, we are now living in digitized times. Why should I go from box to box if I have the opportunity of pushing the information somewhere? And if people are understanding what I need, because now we are back with parametric, because it's so easy to understand. Why shouldn't I do that? Yeah, we love that atmosphere. We love the culture. We really love that. But as I mentioned, I'm still a professor for digital transformation, and some of my students, they will not accept, and they would even do not understand why we love that. They would stand in front of the Lloyds building with their smartphones, making a picture, loading up on Instagram, and saying, standing in front of a fancy building and waiting what will happen. Yeah. And if you then say, well, this is tradition and whatever, they will say, yeah, cool, tradition. Yeah, I've seen that now for 3 seconds. That's fine. So what we do now? Yeah, we will walk through that. Why should we walk through that, Marcus? We have seen it now. And how long will it take? 1.5 hours walking through a building. Why should can you not send us some pictures? It's really like that, because frankly, they are. It's a different culture. They are grown up with all these texting, and we are missing the pub with our colleagues and speaking tete-a-tete and discussing things afterwards. They cannot miss things they have never experienced. Yeah, so it's not that we do not love our industry, and I hope. And I still think that Lloyds will ever be existing, but maybe, as you said earlier, combined with your question, I think it will maybe look just a little different. That the boxes are, there's still someone sitting, but maybe they have a headset on and call there and act more like a prime broker, having someone from the US on phone, and not someone's coming in with a slip. You have someone on phone in the US and saying, okay, I give you 10%, you push the bottom, and then the next call coming in from Hong Kong. Why not? And the boxes are still open from 9 till 12 or whatever. But this is, from my perspective, this will definitely be the future. And if the, let's say, traditional companies, and we have seen that 1,000 times, you mentioned Amazon, if the traditional companies just follow their tradition and say, no, we are not interested in tomorrow's digital transformation, no, we will not go there, then there will come other companies, I will not say like Ryskex, but maybe some other companies, and I go back to the first sentence of our interview, who understand that this is customer centricity, and the customer wants this. They do not want to send 3 brokers to the London market. They want a solution. And if you tell them, I need 20,000 bucks because I need to stay somewhere in a great hotel and spend 5 days and 5 dinners and whatever to get the slip, to get the slip to 100%. And there's a risk manager who's 28 coming from Wharton, who does all these things, do not understand, and say, get them on the Zoom call. It costs us nothing. And if you are interested in having dinner, invite your girlfriend after you have done your job.
Oh, you're taking all the fun out of it, Marcus. No.
Yeah, but frankly, yeah, but
yeah, I know, and that's the reality, and that's the truth, isn't it? You know, we are. I think that's it.
I repacked it a bit like a funny thing, that it does not sound too hard. And to Marcus Schmalbach is now everybody in London telling how the future will look like. This is not what I want to do. This is just, as I mentioned, as I have the great opportunity working with you, with our future market participants, and having also the opportunity staying with the people who have a 40 years career. I love it, standing with them together, listening to their stories and so on. But I think there will be a little change and driven by tech. And this is the only thing I would love to say.
Yeah. Wonderful. No, I think that's a really good place to end it. And, thank you so much for your time, Marcus. I think I'm really excited about Ryskex. And what I like about it is that even for someone that's not I'm a service industry to the insurance market, I think it's a simple concept. And I think all along, all the sort of businesses I get excited about are the simplicity is always the solution. I was actually reading something about Instagram this morning, and you're going, it's just a simple thing, and it's a huge business. So what's just to sort of finish up, what's next for you in coming months? Are there plans for the next year? Have you got growth plans? Are you going to go out for some investment, or are we just sort of ticking things over?
Yes, have an eye on that. We closed an interesting contract yesterday. Honestly, it has not. It has more or less something to do with our new office. I will not talk about that now, but in the next 3 to 4 weeks, because we are following still the strategy we have, but we are going onward. That's the good news. Funding is always a big topic with a startup, as you know, but we will have a funding round, I think, mid next year. The rest is doing well so far. But as I said, we are still a startup. We know where we are, and we are just happy having the opportunity working with all that great companies together, and with such great brands. And let's see what will happen in the next 3, 4, 5 years. But so far, we have a lot of fun. Really like having an interview with you. Thanks for inviting me. It was a pleasure. Great question. Thank you, Alex.
No, thank you.
Yeah. And next time, hopefully, at London Hall with a beer, and healthy without all this Corona bullshit. This is what I really cross my fingers for all of us.
Yeah, me too. I look forward to that. But thanks once again for your time. Really appreciate it.
Thank you very much. Have a great one. Bye.